Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullah. Now let's look at comprehensive example. So SPG Berhad has been awarded a contract to build a playground and a recreation park at an estimated price of 2 million. So this is the contract price. The contract price for this particular contract is 2 million. So the work commenced on 1st July 20x1 and is expected to be completed by 31st December 20x2. So the following balances have been extracted from his book on 31st May 20x2. Okay, you alert with the date, and then here you are being given the information about all the materials. So material purchased from supplier, sent from store, transferred to other site, on site. Okay, and then you are being given the information about the wages, about the site expenses, subcontracted pay, head office expenses, hire of plant, establishment charges, machine and equipment at cost, the value of work certified, the cash received from contractee. On top of that, you are being given the additional information. 10% of the amount paid to subcontractor is for the incomplete work. You are being given the information about the depreciation. The management estimated that the company needs further 404,000 to complete the contract. This is estimated future cost. And then it is estimated that the rectification cost will be 80,000. This is additional for the cost. And then the company's policy is to recognize the contract revenue using cost basis or input method as the percentage of completion. You remember we have two methods to determine the percentage of completion. One is input, the other one is output. In this case, the company is using the input method. Okay, what is it that you are required to do? So you are required to prepare the construction in progress account for the year. So alert with the date, okay, for which period that you are required to prepare the construction in progress or construction in process account. Part B, you are required to prepare the account receivable. Another name for account receivable is the contractee account. The next one that you are required is to determine the amount of contract asset or contract liability. And then part D, you are required to prepare the statement of financial position as strong as at 31st May 20x2. Okay, now let's do the first one, that is preparing the construction in progress account. First, when you get the question, you need to identify, okay, the accounting period. This is very important, okay? You determine you must identify the correct accounting period. If you wrongly identify this, all your accounts, there is a tendency that all your accounts will be wrong, okay? You need to determine the accounting period. So look back at the question. Okay, you are being given the work commenced on 1st July 20x1. It finishes on 31st December 20x2. And you are required to prepare, this information is up to 31st May 20x2, and you are required to prepare for the period ended 31st May 20x2. So draw a timeline. So this one from 1st July 20x1 until 31st December 20x2, and then you are required to prepare account up to 31st May 20x2. Okay, you count from 1st July 20x1 until 31st May 20x2. That will give you 11 months. So that means you are preparing the account for 11 months. So alert with this period. Okay, from 1st July x1 until 31st May x2. Okay, so draw up the account, put in the name of the company, SBJ Berhad, put in the title of your account, construction in progress account for the year ended or for the period ended 31st May 20x2. And then start off with the first item that you have. The one that I have highlighted in yellow here, you have the material. So for your material, you have purchased from supplier. If you purchase from supplier, that will be on the debit or credit side of your account. Of course, it will be on the debit side of your account. You input all the input that you put into for that particular contract or for that particular site. So you debit your purchase from your account with 600,000. Then send from store. This one is sent from store to that particular site. So again, this will be a debit item of 120. Next, you have item number 3 that is transferred to other sites. That means you from this particular site, you transfer to another site. If let's say this site is in Segamat, then you transfer to some other places, for example, to Shah Alam. So that will be, you are taking out of this particular site. So that means you have to credit this account with 10,000. And then this one on site, that means the remaining things that remain, or your materials that remain on site at the end of May, 20,000. So you have 2 items will be on your debit side and 2 items on your credit side. So here, You will have material purchased from supplier 600, material sent from store 120, things that you do not need for this particular contract or for this particular site for that particular period. That means for up to 31st May 20x2, material transferred to another site, you take it out, that means you credit the account. And then material on site also you have another 20. Material on site and this 20 you will use in the next accounting period. So that's why it becomes a carried down and it will be a brought down figure at the for this account. Okay, finish with your material. Next, you look at another item, that is your wages. Wages you have paid for that particular period. That means up to 31st May 20x2, you already paid 240,000. And then there are another amount that you have not yet paid. That means that is the accrued amount. Okay, you have another 12,000 that you have not yet paid. So that will be, you have to debit another 12,000. So that will be 240 and 12. So you see here, the wages paid, the green in color, the 240, and the wages accrued carried down is another 12. Next, you look at the third item here, that is your site expenses. Again, you have paid 40,000, you have accrued site expenses 16,000. The same treatment with your wages just now. So site expenses will be debited with 40 and another accrued amount with 16. You have to debit your construction in progress account here. Okay, you do for the rest of it. Okay, so you see this one, you have the subcontractor paid. Subcontractor paid, this one you debit with 60,000, and then you have additional information. What does it say? 10% of the amount paid to subcontractor is for the incomplete work. So that means 10% of this. 10% of what? 10% of the 60,000. So you have here your subcontractor paid 60,000, and then for the incomplete work, that will be your subcontractors prepaid 6,000. That is 10% of 60, that is 6,000. This one is for incomplete work, not yet completed. Up to now, okay, up to now, you only use up 54,000. So you debit 60 and you credit 6, okay. Next, you have item, your head office expenses, 6,000. Hire of plant, 40,000. All these things you debit, okay, with your in your construction in progress account. You have hire of plant for establishment charges, 80,000. Okay, all these three items, you just debit all these three items. What about the machine and equipment? Okay, look here, your machine and equipment. You have machine and equipment at cost 200,000. 200,000. So this one is at cost. You debit your construction in progress account with 200,000. And then you have additional information. Depreciation for machine and equipment is 16,500. This is actually the cost of using up the item. So or the depreciation, the wear and tear, the usage. Okay. So you have to take 200,000 on your debit side, and then on the credit side you need to take the machine and equipment at carrying value. So the at carrying value will be 200,000 minus your depreciation. Okay, so here your machine and equipment at cost is 200,000, and then you take out the machine and equipment at carrying value carried down, that will be 200,000 minus your depreciation amount, that gives you 183,500. So you have included all the items in the question. Once you have completed doing this, you have identified and you have put in all the items, then you total all your debit item and your credit total your debit item and your credit item to give you a value for your cost of work done to date. Okay, so the balancing figure will be your cost of work done to date carried down. So that finishes the first part of your account. Okay, next you continue with the second part of your account, that is your cost of work done to date brought down here. Okay, and then you need to identify how much is your contract revenue. In order for you to identify the contract revenue, remember the percentage of completion, you have two methods. So in this case, from the question, you are being told that this company is using the cost basis or the input method, okay, to calculate the percentage of completion. So to calculate the contract revenue, you need the input method. Do you still remember how to calculate using the input method? You look at the cost of work done to date in relation to all the costs or the estimated total contract cost. So you take the estimated total contract cost is the cost of work done to date. Now up to now 194,500. Where do you get this figure from here? 1,194,500. Okay, and then plus all your future costs. All your future costs will be the item number 4. It is estimated that the rectification cost will be 80,000. And then the management estimate that you need further 404,000. So that cost of work done to date plus your 80,000 plus your 404. So that will give you 1,678,500. So your percentage of completion will be the cost of work done to date, that is 1,194,500, divided by your estimated total contract cost. So estimated total contract cost, you just calculated the figure here just now. So that gives you a 71% as the percentage of completion. That 71% you need to times with the contract price. So from the question, from the very beginning of the question, you remember just now, this one, the estimated price of 2 million. So that is your contract price, 2 million times with 71%. That gives you 1,420. And what is that? That is your contract revenue. So contract revenue, so once you identify two figures, you know how much is your cost of work done to date, you know how much is your contract revenue. Can you work out how much is your contract profit? Okay, yes, you can work out your contract profit. Okay, you just take the balancing figure as your contract profit. So your contract profit is 225,500. And then the third part of the account is that just take all the carried down figure, put it as your brought down figure. So this one, for example, you have material on site 20,000 carried down. Here will be material on site brought down 20,000. You do for the rest of it. All the carried down becomes the brought down figure. So that finishes the first part of the account or part A of the question. Okay, so part A of the question requires you to prepare the construction in progress account for the period ended 31st May 20x2. So that's how you prepare the construction in progress account. Next, I will then explain to you about part B, C, and D of the question. So with that, I thank you.